Alright, hope everyone's doing well today. I haven't made a video in a little while, so I want to get back in the habit of doing that. So, coming into today, just a couple things that were important. Number one, daily chart, we were again testing these double bottom areas. We actually could not get below it today. Came from 3 chicks up. In other words, breakout, pull back, trying to get a double bottom, breakout mode when you really want to think about it. And you can see it easier here. Arguably a two-legged pullback, leg one, pullback, leg two, to these double bottoms and these lows. The bears, they see a head and shoulders top, left shoulder, head, and right shoulder, and they want to break out below these lows and measure move down. Something like that. Probably won't happen. We'll probably continue what we've been doing. 5-minute chart, pretty simple. I didn't think there was really all that much. Here's some of the lines I had drawn just from today. As you can see, we're kind of in a large channel. We're making lower highs and lower lows. We've got a breakout. So really, when you want to look at it, I really don't want to. I want to use something more fresh. I like this more. Really, if we look at a 15-minute chart, the one thing we notice could be in some sort of triangle. And maybe here to here, and here. Really, the real thing is this. Just large trading range. We've had a large sell-off, and so spike to channel, and now we're going sideways, forming a trading range. So that's really the main thing. 5-minute chart. You can see the key thing is we sold off, lower high, we're selling off again. Yesterday, strong sell-off, 50% pullback, another sell-off, 50, 60, 7% pullback. The key thing is lower highs and lower lows. So here's a high, a low, lower high, pretty much a lower low. Lower highs and lower lows all day. So when we're looking at today, the key issue, bar one, good bear bar, but fairly big. Probably will be disappointing. We're trying to break below a trading range. And then we break below here. For a stop entry above this bar, tail on top pretty big. Following 2 decent bear bars, so probably more sideways than up. And as you can see, we didn't even pull back 50%. We barely even touched 50%, and then we sold off. Strong enough breakout for at least a second leg down, and you can see two important things happen. Number one, bulls, what do? They see buying pressure here and here and here. They buy above here, scalp out here, or they buy down here, scalp out here. For the bears, they sell somewhere in the upper middle to upper third, betting on another leg down. Think about a channel. Channels imply lower highs and lower lows, or higher lows and higher highs. In this case, obviously bear channel, so lower highs and lower lows. And so what that means is, since it's weaker than a breakout, traders will look to buy somewhere in the the middle to upper third of the range. In other words, we hesitated here because it's above 50. It's in the middle between a 50% pullback and a 67% pullback. 67% pullback simply implies a 2-to-1 risk reward. So in other words, here it's a 50% pullback. A good example of here's a 67% pullback. You can see there, this red line's 50% right here, so right there is pretty much 67%. So in other words, you sold this pretty much right here, stop above here, betting on a new low, down to here. Let me just make it more simple for y'all. Okay. So let's say you're a bear, you sell right here. Alright? And you can see you had quite a few opportunities to sell. Sorry, I had that backwards for a minute. What I probably just said didn't make. Let me just start that over. We have a bear leg down. Selling up here around 67% gives you a 2-to-1 risk reward at this low. Here, stop up here, target here, or even at this low. So the key issue with today, the bulls cannot get above a lower high until the very end of the day, and this really was not even from a new low. So one thing to remember is, first, when the market begins to go sideways for 20 or more bars, here's basically 26 bars from here to here. That implies that the market is becoming weaker and more two-sided. Therefore, the probabilities are closer to 50-50. So really, when you start to see the market going sideways for 20 bars, that should alert you to the possibility of a developing trading range. So we may have a trading range, something like this, the upper range and then a lower range, and then we meet in the middle. So that's a pretty common thing. Why is that? Well, I guess the easiest way to put it is, this is pretty much why. Trading ranges are simply breakout modes. They're created by a double top and a double bottom. It really doesn't matter how you look at it. Just know and expect you'll get a measured move one way or the other. Well, in this case, we got the measured move down from this range. So you can say double top from here to here, head and shoulders top, left shoulder, head, right shoulder. Really not even that, because it's just really too small. I just say it's a double top. Or you can call it a final flag. It's really just a bear flag. Broke below, and we found buyers. So what that means is traders know that they're less willing to hold on to a short for many reasons. Clearly bears are, when they get a breakout, they're buying back. Breakout, they're buying back because they know price is going to come back to the breakout point. So when price tests down, both bears and bulls know there will be buyers. Bulls will buy down here for scalps, back up to here. Bears will do the same. It's also, the math is really good. If you think about it, if you buy anywhere down here, betting that price gets to here, and let's say you risk you have an equidistant risk. So what I mean by that is, let's say you buy anywhere down here with a target of this high. Well, the math's pretty good for that because you'll probably win. Why do you think? Let me just draw this real quick to better show what I'm talking about. So I'm going to delete that. Notice here. Why do you think we paused here? You can say here, here, and then here. Well, the reason why, it's a breakout point. We broke to the downside. Bulls will buy above, scalp out. They'll buy it on here. Betting price will close the breakout point, which is why we basically touched it and turned down, and then we rallied up. Trading ranges are notorious. The one thing, the number one way I'd characterize a trading range is, if I had to pick one thing to say about them, they are trying to facilitate as much trading as possible. So what I mean by that is, the market's always forcing you to get in and out. It's always enticing traders to. It never looks good enough. Buy above here, and then you get a 3 pushes up, a triangle, you get out, you buy again, you get out, buy again. You sell, you get disappointed, you buy back, you sell again, you buy back, you sell again. It's more of a channel, but you get what I'm saying. So in other words, overall, real quick, another note. One thing I'd recommend anybody starting out, if you listen to Al, if you listen to any of his books, him being in the trading room, the one thing he recommends is only trading stop entries until you're profitable with that. And there's a lot of truth to that. it took me a long time to realize that for me, when I try and do too much, that's when I screw up. You know, I actually do very well just trading stop entries, which is kind of interesting. I take less trades and I'm more profitable because I don't make dumb mistakes. So, and for me, there's a lot less stress for stop entries. I'm actually only trading stop entries right now. I don't even really trade breakouts right now. And it's not that I don't feel confident with the breakout, because the reality is, sure, if you sell this close and put a stop up here, you're probably going to make money. You'll probably make some sort of a measure move down. However, for me, I'm really focusing on discipline right now and just doing one thing. For me, I'm a lot more relaxed with just stop entries. It's very, y'all have heard Al say it. You have to love what you do, and if you're going to trade, it has to be fun. So, my advice, because I've tried it for a long, scaling in. I've tried that for a very long time, and it's very stressful to me. And makes trading a lot less fun. So with that said, if you're stressed out, or if you're great at scaling in, then scale in by all means. But if you feel stressed, make trading easier for yourself. So, all right, that's all the time I have. Hope everyone has a great weekend. And please comment if you have any questions. Thank you.